Welcome back. For those of us who covered the 2007-2008 crisis, I think what happened back then provides some instructive lessons for where we are right now. And that's what we are doing here. I mean, I love financial history, market history. So I said, why not take a look at the last time we saw such a massive tightening cycle, interest rate tightening cycle. So, let's just quickly begin. I want to make it clear what we're doing and what we're not doing. What we are doing here is comparing the sentiment right now to the pre-crisis sentiment in 2008. What we are not doing is, we're not saying, well, what happened back then will happen now. And we're only saying that there are similarities and perhaps it is only prudent to have some caution on board. Let's just begin right at the beginning, right? The starting point. And this is why these cycles look so similar. Back then, in 2004 and 6, between that period, Fed hiked interest rates by 425 basis points. We've seen interest rates go up 475 basis points in this particular cycle. What I've done is I've divided, that period, 2006 to 2008, into 3 phases. So let's actually begin and pick up, and this is almost like story-like. We begin in, the last hike. The last hike by the Fed was in June of 2006, when the Fed hiked interest rates to 5.25%. Guess what? Many thought the Fed overdid it. It was overkill. And the market immediately rallied. We saw a strong rally for equities from that last hike into early 2007. That is January of 2007. But guess what? Growth then came off a cliff. From almost 6% in the first quarter of 2006, growth fell to 2%. The consensus back then quickly started to sort of become that growth is falling and the Fed will have to help. They'll have to cut rates. Now we get to phase 2, right? This is December 2006 to January of 2007. The December of 2006 jobs data was very strong. So this is opposite of what, we saw in the last phase. There was more data after the jobs data back then, which showed that the economy is doing okay. Market participants gradually gave up on hopes that rates will be cut. Many accepted that Fed has engineered what is a soft landing. And, conversation started to talk about a Goldilocks kind of economy, not too hot, not too cold. And risky assets like equities were strong once again. If I had to pick one phase out of the 3, I would say right now we're in phase 2. The conversation sounds very similar to what we had back then between December 2006 and January 2007. The last phase, what we're presenting, is June to October 2007. And we all know what happened here. The financial crisis started to show up in its ugly form. There was the Bear Stearns news flow, the BNP Paribas news flow. The first fall in the Dow was 8.5% from the peak. There was the Northern Rock issue in England, in UK. Bank of England stepped in. The Fed cut rates. The Fed cut rates, by the way, by 50 basis points in September of 2007. Guess what the Dow did? Dow rallied 9% immediately after the Fed hike. But guess what? In October of 2007, the market topped out, and there was that catastrophic fall which actually followed. Just to kind of sum it up and wrap it up, if you can move on, we're comparing, of course, the cycle because of this, the 425 basis point hike then and the 475 basis point hike that we have seen right now. Although I'd like to end with some important differences between then and now. One, the humongous Fed balance sheet, not present back then. No QE back in 2006 and 2007. Implicit assurance. Markets believe that the Fed and the central banks around the world will save markets, even perhaps before they save the economy. Consumer cash balances. The consumer is in a much healthier way right now as compared to back then. And corporates are also in a much better shape. As I said, we're not saying that that last phase will play out now in terms of what happened back then. And it's also important not to overread into history, especially if you've experienced it. But the point is, history does teach, and we can kind of take away some stuff from this. Let me just quickly